Everyone. So our upcoming panel will dive deep into the transformative role of the PIF in the development of the asset management industry. We have the privilege of hearing this directly from heads of various departments in the fund, providing insights into the meticulous process of selecting asset managers, the decision-making strategies behind investments, and the notable advancements in the back office operations. In addition, we'll have the opportunity to gain valuable perspectives from asset managers themselves as they share their experiences of working closely with the PIF. So please join me in welcoming from the PIF management, Mr. Fadi Saeed, Head of Investment Management, Mr. Ahmed Kurdi, Head of Research and Decision Support, and Mr. Ahmed Filimbani, Head of Investment Operations. We also have with us Mr. Osama Al-Awaidi, Chief Investment Officer at SAB Invest, and Mr. Najmoul Hasnain, Managing Director at Morgan Stanley, Saudi Arabia. Thank you all for joining us today. So, Mr. Fadi, let me start this conversation with you. The Sovereign Wealth Fund is entrusted with the nation's wealth. So choosing the right asset manager is a crucial decision. Walk us through the process of the PIF in selecting the right asset manager.
Well, I think, as you mentioned, you would expect from us to have a very meticulous and a very detail-oriented process of manager selection, and I think it's one of the most actually meticulous processes that we've managed to create in the fund. I just want to simplify it, just to make it, because it's a very kind of a detailed subject, but just maybe to simplify it and put it in very clear verticals. I think, asset management is a people business, and the big emphasis and focus is who's behind the team and who's the team you're entrusting, as you mentioned, with this amount of capital to be invested. So the qualitative aspect is very important at initial stages of screening, where you actually look at the team, the integrity of the team, how the team dynamics, the background, the achievements, and especially, I would say, the kind of alignments to the core values of what the PIF is trying to achieve in terms of higher standards of ethics and compliance and risk management. So qualitatively speaking, this is, I think, a very important starting point. This goes into then understanding the team that you're entrusting with this capital to be management, the investment philosophy, and how you translate this investment philosophy into a very clear investment process. This is, I would say, the foundational step in identifying potential good managers to entrust with this capital. The second part is which is the quantitative part, which is actually mirrors the qualitative, which, as you expect, you would look at historical performance, you would look at risk management, ratios, all kind of quantitative assumptions that you use. And I think this is where the tricky part comes. And this is where I think a lot of work the team puts and invests in order to highlight maybe potential good teams to invest with, which is, I would say, the reality check. So as we mentioned, we look at the philosophy, you look at the process, and then when you analyze the team's kind of quantitative results and historical, you want to relate and you want to statistically dig into and relate these results into what the manager is saying. Philosophy and in terms of process. What is important for us, as been mentioned, of course, by the Deputy Governor, performance is very important. What another layer of importance is making sure that this performance is actually a result of what this manager was communicating through the DD in terms of process, in terms of policies they apply. So what we look on and analyze as a team is we understand that some managers will go through the process. As long as we understand the process, as long as they've been independent, as long as they've been consistent with this process. So this is something that is very key for us in order to anticipate potential future kind of performance, or in some cases underperformance, because we don't expect a manager to be the jack of all trades and do well in each and every environment. So this is, I would say, the kind of metrics or verticals we look at. Definitely this involves a lot of visits, on-site visits, actually seeing how the team operate, a lot of personal interaction, and definitely a never-ending, I would say, loop of feedback, evaluation, and also being very transparent with the managers we deal with and the managers we don't deal with in order to improve and potentially elevate the level.
And ultimately, this is to reach a strong investment decision. So we know one of the key pillars to do that is to see risk and return. What other pillars you consider?
I think risk and return is very important. I think what we look at is, in addition, of course, to consistency and persistence, but we look at compliance. And compliance is a very broad word, but we actually like to quantify and look at certain things that indicate for us that the manager is very keen and actually about his fiduciary duty. One of the things that I think a lot of, as at least we are very detailed about, is the fair dealing. We are actually very meticulous about how the manager is actually dealing, not only for our mandates and our capital we entrust them with, is actually how they deal with other mandates. So we really look at fair dealing practices. We really look at the compliance function, not just to be a department to tick the box, but a very active involvement in how the decision making and how the process actually is implemented and how the compliance department is empowered. And that's why we have a serious, good, very solid weighting on the process of compliance.
And you also hear the advice of the department of Ahmed Kurdi, so I want to hear your thoughts here, Ahmed. You help in the decision making, you help in identifying the good investments. So can you help us understand, is this purely relying on fundamental analysis, or how do you reach these decisions?
Sure. So in terms of, we do fundamental analysis research, we start with our investment universe. So our investment universe is the MENA markets. We screen the market for opportunities, and we screen we break that down into a smaller subset of securities that may be undervalued. We then have a very strong team that carries out fundamental analysis research, going and visiting the company to understand their strategy, really, and meeting them multiple times a year just to make sure we are in touch with the market, with the updates. We build our investment thesis, our financial model, and then come up with a target price that is based on qualitative and quantitative factors. We then formulate our investment thesis with our target price that is in a very well governed process through our valuation committee. From that stage, our portfolio management team takes that to construct a portfolio with a target of generating strong risk-adjusted returns. It's a very well-governed process, and we have internal controls to ensure that the team does not get exposed to material non-public information, which is key to us. In addition to that, the research team, apart from the in-house fund, we also support private equity transaction and wherever our expertise in business models and valuations are required.
And how much technology plays a role here? Like, technology can be a game changer. I'm talking here about AI, machine learning. Do you rely on these factors in your decision making and recommendations?
To support the investment decision making process, we need the right data. And the right data means that the data needs to be accurate, needs to be timely, and needs to be in the right format for the decision maker to take the right decision. In the first instance, to ensure that the data is accurate, we actually deploy autonomous programs, or bots as we call them, to do sanity checks, because with the magnitude of the AUMs that we manage and the number of transactions we need to go through, it's very difficult to do sanity checks on data by plain sight. So we deploy those autonomous programs to make sure that erroneous data is flagged, looked at by the team, and addressed on the spot. So that's when we talk about the accuracy of the data. The second piece is having timely information. So we, through our very strong partnership with the Digital and Technology Department at PIF, we ensure that we have the right data feeds from our fund administrators, custodians, and market data providers to make sure we have the data feeding into our systems at the right time. And finally, regarding having the right data presentable to the investment decision maker, we have a world-class performance dashboard that is updated automatically on a daily basis to present performance, risk, trade analytics, style analysis, etc. So we look at a comprehensive picture that enables the decision makers and the portfolio manager to monitor it. If I can touch upon one final thing regarding artificial intelligence, we're actually in the process today of, given the amount of managers we have and the data we have, we are in the process of deploying a machine learning model to look at those attributes: risk, return, trading behavior, investment due diligence, operational due diligence, and and have the machine learn what makes a good or bad manager, and help us in and aiding the investment decision. It's not like the machine will make the decision, but it helps make a more informed investment case. And we are, given also the magnitude of the data we have, we want to deploy a large language model. So instead of sifting through the dashboard of 32 managers or 33 managers today that we have, you can actually type like ChatGPT and ask the right question and get the right answer from our data warehouse.
But do you look into alternative data? And I mean here data from satellite images, data from social media that can help you also with your investment decisions. There's a trend towards that.
Yeah,
I've seen in the industry.
I think we're exploring the machine learning piece, and that's something we're starting to do. In terms of alternative data, maybe that's something, we're always tech savvy and we want to look at new ways of doing things. However, it's not something that we deploy today.
And can you give us more information on your selection process and your recommendations for the fund managers? What kind of, what do you look at? Their alpha, which benchmarks do you use to compare their performance?
We have a very strong performance analytics team, and we follow global standards, the best global standards when it comes to performance measurement. We actually follow the global investment performance standards. We look at the sources of return, sources of risk. In terms of returns, we look at the two-factor Brinson model to see the returns are coming from security selection or sector allocation. We also look at risk metrics. We look at transaction cost analysis to see whether the trading behavior of the manager has added to the return or detracted away from the return. We look at style analysis to see whether the managers are staying true to their investment process, investment philosophy, or they're drifting away. So that is something that is, again, updated on a daily basis for the investment decision makers to look at on a daily basis. Although we are a long-term investor, however, that data is readily available for investment decision making.
Thank you, Ahmed. I will hear from the second Ahmed on this panel. And also you had the operations department. So how, from that aspect, how different is the due diligence process at the PIF from the market? Can you walk us through this process?
Sure. So we take the ODD process extremely seriously. As Fadi said and Ahmed, it's a continuous improvement, but it's a pre-deal engagement that we participate with the asset management. And as the first panel mentioned, it's something that doesn't happen overnight. It's a continuous work. So we go in sometimes for a week, and we deep dive into a lot of aspects of the company's infrastructure, processes, procedures, compliance. It's a very, very intense work that can take 9, 10, 12 hours sometimes, either in person or virtually. In PIF, we do roughly about 20 to 30 ODDs a month between MENA and international. And we started to improve our processes so much that we decided to in-house it and move it from a collaboration with an international provider into building it in-house for two reasons. One is to retain the talent and the knowledge, and the second is to keep in touch with the asset management and to continue the relationship with them. So the objective is not just to go and rigorously look into the processes and procedures and hammer the asset management. No, it's actually first to protect PIF assets and protect PIF's name. And then second is to, as Deputy Governor mentioned, we have a responsibility to actually be a market maker and do the right thing. So we continue to work very hard with the front office, with compliance, with legal, with IT to make sure that we continue, improve, and lead in the operation due diligence.
How about the back office? Give us more information of what goes on behind the scenes. I know that the back office operations are advanced at the PIF compared to what's available in the market. So can you give us more insights into that?
So I would say it's been an evolution. I mean, since we started the investment operation and shared services in 2016, we went through a really, tremendous improvement from manual processes, from paper-based into this iPad that has everything that I own today, thanks to our colleagues in digital technology. So we keep pushing our boundaries to make sure that we don't just stay still, we go ahead of the crowd. And I have the pleasure to speak to our colleagues in different sovereign wealth funds. And I can tell, alhamdulillah, after 7 years working very hard to improve and digitize, we're ahead of the crowd. And we actually share notes to make sure that people follow what we're doing. And we don't stop. We use machine learning, robotics for matching, implementing Swift to digitize all of our transactions, order management system from the order matching into the settlement of trade. Everything that we do today is best in class, and we continue to push our boundaries to make sure that we excel in what we do. The second biggest project that we're working on today is a data hub, which is something that we call in PIF the source of truth, and it's a repository of everything that we own today, whether it's investment or non-investment. And it's something that we use AI a lot to make sure that our partners in the front office, risk, investment, compliance can utilize. And it's something that we continue to improve, working with multinational, working with asset management, to make sure that we are best in class, and everything that we have is to service the growth of PIF and the investment team.
Thank you, Ahmed. We would like to hear now from the asset managers. Mr. Osama, from your experience with the PIF, how different was the due diligence process?
Thank you, Lara. From the beginning, the PIF due diligence process was clearly not only focused on selecting managers for investment returns, but also for the development of the asset management industry, which is very much in line with the 2030 visions and financial sector development programs. The process is very comprehensive, well-structured, and methodical, but what's unique about it is that it continues well after the conclusion of the standard exercise, where we've seen some institutions and sovereign wealth funds are satisfied with the conclusion of the due diligence exercise. PIF did not stop there. It honestly makes us view the relationship as more of a partnership, which goes beyond the investment aspects of the relationship. And this approach, as one of the objectives that the Deputy Governor, Mr. Yazid, mentioned, raising the bar, definitely it raises the bar, and actually it raised the bar and strengthened the asset management ecosystem. Since the adoption of the due diligence process by the PIF in 2019, I've been in the industry for a very long time. I've seen tremendous improvement in many aspects, in areas like investment capabilities, investment practices, asset under management, as was mentioned, diversity of product offering, and wealth of talent. The PIF, everyone complained that the PIF is attracting and taking the best people from the industry. That encouraged us as senior people in the industry to actually train and replenish the talent. And this actually became a really positive sum for the whole industry rather than a zero-sum game or negative for the private sector players versus the PIF.
Competition is always good, right?
Absolutely, absolutely.
Um, so we have with us a lot of asset managers that work with the PIF, and you are one of them. So what's your advice between, what can you tell them about establishing the right relationship with the PIF?
I think transparency and honesty is the key. We all have faults. The industry is new and young. There is a long way to go. And that is what I found when dealing with the PIF. Whenever we hear that some managers struggled and we start asking, we find out that they weren't as forthcoming and transparent with the PIF. And that is the advice. Be transparent, be open, and share as much information as you can. Because what you will get from the PIF is a feedback that will help you address these shortcomings or gap in the process, or it can be in HR, in operation, in any area of the business. But it's not, when you get the feedback, you would get also some guidance of how to tackle them. And that is very beneficial, honestly.
Thank you. Mr. Najmoul, I want to hear your thoughts. You have a long presence in Saudi Arabia. You came back in 2007 to the region. In your opinion, did the PIF play a major role in attracting global investors to Saudi Arabia and to the region? And how is that?
Yes, absolutely. Maybe I'll start with the quick history of Morgan Stanley in Saudi Arabia. As you have correctly pointed out, Morgan Stanley established its local offices back in 2007. And we established the investment management department in 2008. And launched in January 2009, we launched our flagship Saudi equity strategy. And I've been associated with that strategy since then. Now, being close to the market that you invest in is important. It allows us to better understand the changing dynamics that are happening on the ground and make us better investment decisions. I will come to the PIF part as well, but I just want to set this stage in terms of how and the establishment of the organization. I also, and this has been mentioned by other speakers as well, that I will second that. I believe that the industry is in early stages of development. And it is expected to develop and grow further, and numbers have been quoted, and it's encouraging to see that it seems to be even more than what I would have expected. But these are certainly development or changes that have been supported by Vision 2030 policies, and also the regulatory changes that have been implemented by the Capital Markets Authority of Saudi Arabia. Now, PIF has played an important role in help develop the local industry by allocating assets, as well as encouraging asset managers, as you have heard as well, to operate and bring in more activity into Saudi Arabia. And we're certainly helping the industry grow and expand. Now, having a stable investment, a long-term and a stable investment base is important for the industry because it allows us to plan and grow. If you're not sure about what kind of AUMs you would have tomorrow, it is impossible for the industry to think long-term and plan for the growth in that direction. And certainly PIF has brought that stability into this industry. And finally, I will say that overall, my expectation is based on what I've seen in terms of the policies and various initiatives that have been taken. There will be more players that will join the industry. We certainly expect that. It will increase competition, but I think also it will increase the industry size as well. It's not just that we will have more competition. No, I think it will also certainly bring in more capital and help grow the industry on an overall basis, which is certainly good news for the long-term growth of this industry.
Is there something specific that you would like to see from the PIF?
I think we had already a lot of discussions. I think whatever they have been doing has helped the industry. Earlier it was mentioned about the fee part. I second that. I think what was happening, I have seen also happen earlier, was there was perhaps overemphasis on fee. And what it was doing to the industry is that it would not allow us to retain and attract talent, which is absolutely the vital resource for us to be able to generate alpha for our clients. So I think that has been done. And all the other initiatives you have heard, I don't think I can tell really anything new in that regard, but certainly the initiatives that we have seen already and we are being taken are clearly in the right direction.
I know we mentioned this in the previous previous panel, but you mentioned talent, and you've been here operating in the region for so many years. Do you think that the pool of talent available, the local talent, has evolved in the past few years?
Yes.
Or is everyone going to the PIF?
So yeah, let me start by saying this, and that human capital is the engine of our industry. So this is the most critical component for the industry to be able to essentially operate and, of course, grow the business. Now, which means that building a strong team of professionals is critical for us in the investment management or asset management department. Also, I would say that local talent has better knowledge and understanding of the local dynamics, social, economic, and other factors that are in play here. Simply, if you have been exposed to the local environment, you have gone through the local school systems, you have seen the social changes over the number of years, it gives you a unique perspective, and that helps directly or indirectly in the investment decision-making process as well. So that is an important and ingredient that they bring into the picture. I would say yes, locally available talent quality of the local available talent has certainly improved over the years. And also the growth of the investment management industry means that there is higher demand for this talent as well, which is positive for the industry. There's no good if you have good talent if you don't have demand for it. So I think at the end of the day, it works for the industry as you create that growth and high educational standards. Now, Morgan Stanley has a structured program to help develop junior talent as well. Also working with the senior team members is a very important part of that development for Morgan Stanley. And also I encourage my team members always to participate and continue their educational and development throughout their career. And finally, maybe we are taking more time than I expected, but just to close off on this, I will say that a well-educated, ethical, and a professional team is the absolute requirement for our industry to continue to grow and develop in future.
I guess in an era of globalization, no one can deny the importance of localization. Thank you all so much for your valuable input on this panel. Thank you for your continued attention. Another very short break, and we'll resume the third panel. We will be discussing the private equity in the MENA region.
Thank you.
Thank you.